Welcome. As we approach December, we're looking at the markets as we go into this last month of the year. Today we are with Bryan Noble from tradernoble.com. Bryan, welcome.
Thank you, Jeremy.
You produce a daily blog that goes out to those that subscribe, and you've recently been talking about the S&P 500, euro, dollar, and I know also gold. And these are three heavily traded areas at the moment, as in the wake of Donald Trump. Record highs on the S&P. Let's start first of all with that. There's much discussion as to whether you should go long or short at this point, but at record highs, what's your choice on this?
Well, firstly, I think Donald Trump getting elected president has been the best thing to happen for traders in many a year. It's certainly going to add volatility over the next couple of years, which is great for us. S&P has had a tremendous run from the 2028 low print the night that Trump got elected. I think when he came out with his acceptance speech, he was more gracious than people expected, and the whole market's just turned around. So anybody who went home, into the election long of gold, the bond markets and short the S&P got absolutely annihilated, unfortunately.
Yeah.
We've interesting times. The S&P is obviously, this is traditionally one of the strongest weeks of the year into Thanksgiving. Today only a half day with the markets closed at 6 o'clock. I think the S&P probably can get it, as you can see from the Bollinger Band there, we could probably get up possibly to 2220 to 2230. Then I'd probably try to go short up there. We are overbought. The daily sentiment index is up at 56% buzz, which is the highest since August, which was a short-term top before the market corrected. But I wouldn't be looking for a huge sell-off. I think maybe the S&P might be able to fall 2 or 3%, and then we'll rally back into year-end as the fund managers try to mark the markets up for their funds.
You mentioned the daily sentiment index, the DSI. Explain exactly how this works.
Yeah, it's basically a sentiment of traders. They do a survey every week. It comes out on a Friday night, what the sentiment is for what way traders got their positions. On the S&P, generally when you get over 55 to 60%, we're overbought. If you go back to the election, when the S&P fell for 9 days in a row, which is the record that held since 1980, the DSI for the S&P was at 4% on the Friday before the election. Obviously the market rallied Monday, Tuesday, sold off then on the election night, and then after his speech it then just went the other way. But funny, when everyone got bearish on the S&P, it was only down maybe 60 or 70 points in those 9 days. So it wasn't an aggressive sell-off. The Dow would only move 600 points. So it wasn't something like where we fell 2 or 2,500 points. And I mean, the moves since then have just been staggering. Yeah. If you look at the Nikkei, we've rallied 3,500 points off that night, with the dollar yen having gone up 14 days in a row until today.
Yeah. Let's just go back to the chart very briefly. It is overbought at these levels. Are you looking at a better level to buy into if you're long on this market?
Yeah, I mean, certainly today my blog had said to buy between 21.93 and 21.98, looking for, my blog is a daily blog. It looks for 6 or 7 points, which is 6 or 7 handles. Then we get out. The blog works if the trade gets exercised once and you get your profit, that's it. You don't look at the S&P again until the next day. That's unless I do an intraday commentary. There are the rules. Yeah. And it works very successfully doing that. So today, like yesterday, we were a buyer between 19.95. It didn't hit. Wednesday, it hit perfectly. 93 was my buy level, and then we rallied up to 22.02. So it doesn't hit every day, but I haven't been short. I have not been short since he got elected. I will certainly look next week if we can get up to that 22.20 to 22.30 level to go short.
Okay, all right. Let's move away now from this. You mentioned the dollar yen as a wonder trade that's been just going in one direction. Let's take a look at the euro against the US dollar. And of course, this is the other way around. So this is the way we read this is that the chart showing euro weakness that we've seen predominantly because of the strong dollar. Today there's been a little bit of a turnaround. We've got a green candle here suggesting potentially, possibly, is this a bottom? How do you read this chart? It is back from being oversold as well.
Yeah, well, interesting. The one thing I look at it is the convergence between the dollar index. The euro makes up 57% of the dollar index, and the euro dollar itself. The dollar index broke its March 2015 high at par 65 last week, and we've rallied up to a high of 102.16 so far. Backed off today, we're back down to 101.40 today. Conversely, the March 2015 high our low for the euro was at 104.72, and we haven't got anywhere near that yet. The low so far has been 105.17. So So we have a massive divergence, non-confirmation divergence between the euro dollar and the dollar index. If the euro dollar can break 104.60, which was the March 15 low, then we can possibly go down to 101.60 and probably test parity before we bottom. But interestingly, you mentioned the DSI earlier on. The daily sentiment index for the euro is at 6%. So traditionally, when you see single-digit readings, we're very near the cusp of a major move. If you go back to last December, when the famous ECB meeting on the 3rd of December, the euro bottomed at 105.20. We closed that day at 109. Same in March of this year, we hit 108 low and we closed at near 113. So these DSI numbers cannot be ignored. I would certainly not be short the euro at all.
Okay, all right. So we're long euro up to what sort of point?
Well, if you look there, the 50-day moving average is 109.44. The mean standard deviation of the Bollinger Band there comes in at 107.90. So I certainly think there's no reason why the euro can't get back up to 107.5 to 108, and then we'd have a look to see what the readings are then. But certainly the DSI, it's on tradefutures.com is where you get these readings. It's well worth watching every day.
Okay, all right. Good hint. Let's bring up a chart for spot gold. There've been a lot of clients talking about this because we've been highlighting the fact there's not really much support from where we are at the moment here at 1186. I mean, we were trading up over $1,300 just a month or so ago. And in fact, this spike here was the Donald Trump spike, wasn't it? But there's been a massive reversal since then.
Yeah, I mean, as I say, our gold got up to a high of 1340 that day. You know, this is supposed to be a quiet week for trading. On Wednesday, in a 90-minute period, 8 of my 9 calls that I write about got hit in 90 minutes, which has never happened before. One, of course, being gold, and gold just got absolutely trashed on Wednesday with no liquidity. Interesting, last night I wrote on Wednesday's comment, 1170 to 1175 is huge support for gold. We bottomed last night just over 1170. We've so far rallied $20 off that. Obviously the euro dollar going up is a help. I think as long as gold can hold over 1170, I wouldn't be short. Also the DSI is down at 6 to 7% as well, so single digit readings for the gold market. There's no reason why gold can't go back up to 1230 to 1250, and then we'll see what happens from there.
So you're taking a long position on gold at these levels?
Yeah, I'm long gold, I'm long silver, I'm long the euro dollar.
So long as the euro turns round.
So as long as we can stay above those levels mentioned, the 104, 60, 70 area from March 15. Like, these are big levels. And the other thing you got to remember, the Bundesbank do not want a weak euro. This goes against all the grains, especially with inflation finally beginning to sort of tick up, and with the bond yields backing up as well. So, and this strong dollar causes huge problems, especially with the emerging market currencies. We saw that the Turkish central bank had the hike rates yesterday on the back of the weak lira. So it's going to be, you've got to keep an eye on the emerging markets going forward for the next week. And obviously with the referendum in Italy on Sunday week, you know, it looks like that's going to be voted against, but as we can never trust any polls after what's gone on this year with Brexit and Trump.
Yeah, as we go into December, looking like it could well continue to be volatility. Bryan, thanks so much indeed for joining us. That's Bryan Noble from tradernoble.com. You can catch more on Bryan's website. And of course, alluding to the 4th of December incoming referendum in Italy, we've got the Austrian rerun of that presidential election. We've got the OPEC meeting. And of course, later on in December, we've got the interest rate meeting from the Federal Reserve. So quite a lot to chew on. If you're a trader, do have a good weekend and watch those stops.